We think there's really good tailwinds on the industrial sector that can hopefully offset the macros.
I'm here today with Michael Gamzon, President and CEO of Indus Realty Trust. Can you give us an update on operating fundamentals at Indus? Which markets are strongest right now, and do you anticipate any slowdown in the months ahead?
Sure. We're really seeing good strength in almost all our markets, despite the headlines going on. That leasing demand remains really strong. Rents continue to push. In the markets we're actively leasing in, which today are Charleston and Orlando in particular, we're seeing really good strength. Charleston's really being driven by port demand. East Coast ports continue to grow, as well as industrial and manufacturing growth in that market. Auto is a big driver. In Orlando, we're really seeing it from the population growth, the hospitality industry, tourism, and that's really driving those two markets. But really across the markets we're in, it's really strong. That said, we read the headlines, we see what's happening in the economy, so we do expect likely it starts to slow, and we're preparing for that. We don't have a lot of vacancy coming up in our portfolio, which is good if it does slow. But hopefully things continue to power through. We think there's really good tailwinds on the industrial sector that can hopefully offset the macros.
What sort of construction challenges has Indus faced, and do you see any improvement in store? Yeah,
I think like most people, we've sort of been three areas of challenges in construction. The first is on the front end of just permitting and approvals. Really since COVID, most of these municipalities have really struggled with staffing, as well as a backlog that they just really haven't worked through. So it's surprising how long it's taken to get permits and approvals. Second is availability of certain materials. Steel was an early problem. Roofing insulation, HVAC units, dock equipment, almost feels like the whole building. That also has been tough, and it's extended both building construction and putting tenants in the space. And then lastly is really cost, because again, in this environment where oil was up, so that impacted petroleum-based products and asphalt, steel, concrete pricing was up. We are starting to see some relief. Hurricane Ian sort of pushed back a little bit of that time frame, but we are seeing things like structural steel prices have started to come down. We expect petroleum-related products peaked earlier this year and will start to come down if oil stays where it is. So we are seeing some relief on that, as well as on the time frames and availability.
And what potential do you see for land purchases and other acquisitions? And will that be impacted due to capital market uncertainty?
Yeah, so we think the opportunity set's really good. We typically like to play offense when others are playing defense. We tied up some land right at the start of COVID when other people dropped it, and even back in the GFC, entered some new markets then. So we think it's a great opportunity to do it with debt costs basically doubling on floating rate and even fixed rate basis. That's, we think, going to cause people to relook at the assets they own and start to realize the cash flow isn't quite what it was, as well as other developers and builders who have land sites under agreement. Again, they're going to look at it and say, we're uncertain where the cap rate exit might be. Debt costs are double what we underwrote, and therefore this doesn't make sense for us. We need to find willing sellers, but we think ones that already are in that process will become available. So we think it'll be a really good opportunity to grow and acquire assets.